Okay, good afternoon. Welcome everyone to the Budget Line of Business 4th Annual Intro to Budget Form. Today's session is Intro to Budget Formulation 1. My name is Janice Butler, your host. I'm a Senior Advisor for the Program Management Office, and Budget Line of Business has 25 partner agency offices, and we develop modern, adaptable, cost-effective solutions and technology. And we also host training as we offer you today. Our presenters today is Andy Pavord. He's the founder of the Federal Consultant Allowance, has led budget processes for the DC government, the U.S. Small Business Administration, and the U.S. Department of Treasury. We also have with us Rick Taylor, served over 34 years in the field of financial management and budgeting for programs in defense, law enforcement, regulatory, and scientific agency. Thank you, Rick and Andy, for joining us, and I'm going to turn it over to you.
Okay, great. Thank you, Janice. Let's get started right away. So here are the objectives for our discussion today for both this session and the later session. First, we'll describe the President's budget and what's included in that budget and OMB's role. Then we'll turn to the budget data that is included in the President's budget. It's very important to understand the structure of the data and the kinds of data that are included in that budget request. We'll discuss and review pages from the President's Budget Appendix, a major component of the request package. We'll then move to describe the steps in the internal budget formulation process within most agencies, which culminates in the OMB submission. Then we'll look at the OMB review and discuss how OMB reviews agency budget requests and comes to a final decision about the level of funding through the passback and final settlement processes. Lastly, we'll go through the process for producing the President's budget and releasing the entire budget request package to the Congress and to the public. If we have time, we'll discuss some linkages between budget formulation and budget execution and why these are significant. On to the next slide. Just flag me if I have any questions in the chat box. I can't see the chat box while I've got the presenter's view up, so just let me know. So here's a chart, a depiction of the schedule or the cycle of the federal budget process. It has three distinct phases: formulation, congressional, and execution. And we'll talk about a little about reporting at the end there. In the formulation phase, the executive branch develops its budget requirements for the coming year. So like we're working on the FY26 budget in FY24 and FY25. This starts with departments and agencies having internal budget discussions and reviews, proceeds with discussions with the Office of Management and Budget, and ends with the submission of the President's budget. The congressional phase is where Congress reviews the President's budget, conducts hearings with departments and agencies, and drafts and processes appropriation laws to implement the decisions. The process ends with the enactment of the appropriations laws. In execution, the recipients of the appropriations use these resources to implement their programs and objectives in accordance with the conditions of the appropriations. In reporting, it's not really a major phase on its own because it occurs periodically and throughout the process and at year end. So it's really kind of overarches everything. Financial reports are provided within the departments and agencies and to the Congress and the public on the uses of the resources provided. Now, this is the typical or notional schedule. Obviously, this can be impacted by administration transitions and other events. So this is the typical or the like I said, the notional schedule, but obviously it can be changed sometimes due to exigencies. Just to set the stage, here are some organizational terms we'll use in this presentation. When we think of a bureau, we think of a major or principal subordinate organization that submits a budget request to an agency. So it might be an administration or an office underneath the next phrase, or agency. So when we say agency, we're talking about like a cabinet level department, a major independent agency, and the examples there kind of give you some impressions about that. So just so we kind of know which level we're talking about. And of course, the Office of Management and Budget, there's only one. So when we talk about OMB, That's who we're referring to. So why is the federal budget process important? We'll see in a moment, the budget process determines where trillions of dollars are spent each year. The budget is where the president demonstrates their priorities for the nation in the coming year. The budget translates rhetoric and aspirations into figures by showing where the president proposes to direct real resources. Deciding what goes into the president's budget and what's excluded is extraordinarily important. Nearly anything a president wants to accomplish costs money. Under our Constitution, the only way a president can spend money is if Congress passes an appropriations law granting budget authority to the executive branch. The president's budget expresses their priorities and opens the discussion with Congress about what might be alternative uses for these resources. Congress, of course, has its own ideas of what those priorities should be. The indication of where and how the government might spend money in the coming years has a tremendous impact on other governments and businesses. Will there be new jobs in a certain part of the country due to a proposal in the president's budget? Will the government change retirement benefits, which could impact millions of Americans' individual retirement plans? Things of that nature all come through in the president's budget. So in this segment, we'll discuss the president's budget itself. We'll discuss its size and scope, the legal requirements, and its content.
So I think I will just like to point some things out in this slide, because in the beginning, the idea of a budget is not in the Constitution, right? There's only appropriations in the Constitution. So the Constitution establishes the requirements for appropriation, but no budget process. Now let's look at the articles. Article 1, Section 8 grants the power to spend. It says that Congress shall have power to lay and collect taxes, duties, imposts, excises, and to pay the debts and provide for the common defense and general welfare of the United States. But all duties and imposts must be uniform throughout the United States. So the power to spend belongs to Congress, according to Article 1, Section 8. But there's an important limitation on the Article 1, Section 8 in Section 9. This is a limitation on spending power. It says, no money shall be drawn from the Treasury, but in consequence of an appropriations made by law. Now think of what that means. You all know what a law, how a bill becomes a law, right? The House and the Senate have to pass it, and then the president has to sign it. So what does this mean that appropriation has to be made by law? In practical consequence is the Congress can't spend money by itself, right? Because it needs the president's signature to turn it into an appropriation laws. And the president cannot spend money by himself because he needs an appropriation. So the Constitution sets up that both branches have to agree for spending to occur, unless, of course, the president vetoes a bill and it's overridden. So that forces the two branches to work together. But then Section 9 requires transparency, because a regular statement of accounts and receipts of expenditures of all money shall be published from time to time. The framers of the Constitution understood that if things can be done in secret, then you don't have to pay attention to the appropriation laws. So to make appropriation laws have meaning and make them enforceable, you had to publish a statement of receipts and expenditures. And so these are the limitations on the president and the Congress. President may only spend funds as appropriated by Congress. There's no such thing as an executive appropriation. Appropriation laws, like any other laws, cannot violate the constitutional rights. Congress may attach riders. They can put conditions on appropriations. And there's always, because of the appropriation clause, a limitation on amount and object. In other words, if you pass an appropriation law, you have to say how much money it is and what's it for. Because if you don't say those two things, then the concept's kind of meaningless. So I thought it would, if you go to the next slide, I thought it'd be kind of interesting for people to see the first appropriation law in the United States passed in 1789. It was one paragraph, and you can see, 216,000 for the civil list, which is basically a list of payments that were made to individuals by Congress. And then you have the Department of War, and then for the Treasury and pensions. That was it. 2 sentences. Now we've come a long way since then, right? The latest omnibus bill was, I think, 1,874 pages long. So we've come a long way. But next slide. In the 19th century, there was only appropriations, right? So the way there was no budgeting. So the way the government was funded is agencies would send it what they called estimates to the Secretary of Treasury, and he would compile them all and send them over to Congress for their consideration. And so that meant that the president was basically not involved. There was no attempt to try to put together a plan or any reasoning. So what happened was there was a reform movement, and a guy named Frederick Cleveland and a lot of others created the idea of a budget. They took it from England, and here's the idea. A budget is used to mean a plan for financing an enterprise or government, in our case, the United States government, for a definite period, and it's for appropriations, usually 1 year, though there's multiple years, which is prepared by a responsible executive, in our case, the president, whose approval and authorization are necessary. Submitted to a representative body, Congress, whose approval and authorization are necessary for a plan to be executed. So this is the idea of a budget that came to the United States. And next slide. And it was codified in the Budget and Accounting Act of 1921. So what happened is Congress was tired of getting all these individual appropriation bills that didn't necessarily add up. They couldn't figure out what the deficit was. They couldn't figure out what the spend plan was. So they said, okay, we're going to bring some order to the process. And so they did a couple of things in the 1921 Act. First, they created the Bureau Budget, which became the Office of Management and Budget later in 1974. Because they said the president needs a staff to analyze and organize the budget. Then they created a process by which the president requests appropriations for Congress. So only the president, acting through the Bureau Budget, which became OMB, can request an appropriation from Congress. So only the president. So what this means is, under the new process in 1921, so it's not that new anymore, agencies were no longer allowed to go directly to Congress. They have to go through the president. Only the president could request a budget. And so that's what's evolved into the modern practice of a president's budget request going to the Congress. According to current law, it goes in the first Monday in February. But of course, we've seen that not being followed. Of course, it's never followed in transitions because, it's not really fair for a president to be inaugurated on January 20th and have to turn in a budget like 3 weeks later. So this year, for example, the budget will be delayed. The budget request to Congress will be delayed. But then hopefully we'll get back on a normal schedule as the administration, gets its feet on the ground and gets running. But these acts specified a raft of information that the president was required to send with the budget request to Congress about expenditures for prior year, receipts for the past year, financial data, employment levels, all this kind of information that you will see turns into the modern budget request. Next slide. So is this back to you, Rick, or still me? So the budget.
No, I got it. That's cool.
Okay, good.
So here are the parts of the president's budget, and they're called volumes back from the day when it was produced in paper copies, which I don't even think they even bother with anymore. I remember the new exciting technology was you could get it on CD. But it consists of 4 volumes published by OMB. The first volume is the budget message of the president. This includes his message, which is usually in the form of a letter, pretty much, prose, but it also provides summary tables and other overarching summary information. The second volume is called the Analytical Perspectives. It includes a series of essays that discuss issues of particular importance to the president's policy agenda. So examples of issues discussed include management reforms or cost-cutting proposals. It really goes into and puts some meat on the president's proposals of what he or she is seeking. The third volume is the appendix. So this is really the meat and potatoes. For agency budget staff, this is really the most important volume. It includes detailed information for each federal department and independent agency, really anybody who's making a request to the Congress for an appropriation. In our next segment, we'll delve into this information in detail. The final volume is the historical tables. This is really interesting because it presents data, frankly, all the way back to the founding of the government in 1789 in some cases. So one can look back and see what defense outlays were 100 years ago, or when an agency was stood up for the first time, things of that nature. The history is laid out there all the way through to the present day. So it gives one a great perspective on the budget request over time. So let's talk about what's in the president's budget in a lower level of detail. Like we said, it has the budget message, the requested budget authority, the proposals, the outlays. You can see that whole list there. And it has data for multiple years. So first of all, the president's budget is a very large and complex document. It includes his message that describes the president's priorities and the authority for each program in the United States government. The estimated outlays, or in other words, how much money the government really plans to spend, the estimated receipts, how much it plans to take in, and how much the money is going to go through taxes from federal services provided for the sale of things like entrance fees at parks. It also includes the estimated surplus or deficit for the coming years because of the revenues or expenses exceeding one another and other government-wide issues. It includes the historical data that the director of OMB decides to include and continues on past practice. It's important to understand the years as they're presented in the president's budget. The prior year, or PY, is the year completed prior to the current year. So in this case, in the last president's budget, it would be FY24. It just ended in September. And so, it's the prior year. And those figures are typically presented as actuals. In other words, what really happened. The current year, or CY, is the years that is ongoing at the time the president's budget is submitted. So right now that would be FY25. And lastly, the budget year is the year that the budget is seeking resources. So that's in this case, FY26 and on out. So you have budget plus 1 would be 27, BY plus 2 would be 28, and so forth. Those out years refer to areas technically beyond the budget request, but are included for perspective for the decision makers. Departments and agencies publish the Congressional Justification documents that provide more detailed information that appropriation committees and their staffs use to draft appropriations laws. So it's a level of detail even below what's in the president's budget. It's often formed from the history with an appropriations committee, what information they like to see. So they may ask for certain exhibits to be provided, and typically once they're included in there, they're typically included for many years. It can be changed, but typically they're pretty steady. So it gives them things they need to see. And back in the day when things were on paper, one of the rites of passages of being a budget analyst in headquarters was delivering physical CJs to your committees, literally walking around the building with boxes and boxes of copies and dropping them off at your 4 appropriations committees, or the 4 corners of the appropriations committees. So Congress is the primary audience for CJ documents. It means a lot to the appropriations staff because, again, they use that detail in a way that they're familiar with to draft appropriations for each year. The format and what's included can vary greatly from one committee to another and one agency to another. Again, it's what they've worked out with the staff. So some agencies have certain exhibits that they have to present, and others have probably never heard of that exhibit or that way of formatting the data. It's really important to work with your congressional appropriators and your Leg Affairs or Congressional Affairs staff if you want to make a change to what's in your CJs, the Congressional Justifications. Because again, it's really used by the Appropriations Committee staff to make decisions. And so you wouldn't want to change it without their buy-in and then, have to deal with things, during the budget process. And while those needs take precedent, It's also an important document for many stakeholders. So if you're an agency, let's say, that services veterans, you may have veteran service organizations that are very interested to see the congressional justification materials, which are public typically, and see, again, how the agency is prioritizing their request and where they intend, where they are requesting resources and where they intend to use them. Also in big agencies, many times people within the agency use the CJ as a guidebook. With a very large agency, they may know their own programs and their own areas, but the CJ can provide them insight into other bureaus or other programs with the agency. One of the final things to make sure is understood is that the data presented in the CJ has to align and match with the president's budget appendix. They're submitted in two different processes, but it's absolutely vital that they agree. You don't want a number for some request that's one figure in the CJ and one figure in the president's budget appendix. This would be very confusing and lead to a lot of review and which one's the real number, which one should we really look at. Often also during the day of release, the agencies schedule rollout events. So these might include meetings with congressional staff to brief them on the budget. It might include meetings with key interest groups, and also often includes press availabilities. In other words, your CFO or your head of your budget shop may work with public affairs to make themselves available to the press on background to explain what's in the agency's budget request. So here's a quick question just to see how we're doing. Can the Secretary of Department make a separate budget request to Congress whenever they want? Go ahead and put your answer in the chat. Good. We've got a plethora of no's. That's correct. This is what the Budget and Accounting Act of 1921 specifically prohibits. The Secretary may respond to Congress if it asks a question regarding resources needed for the department, but this response should be coordinated with OMB first. Now we'll talk about some categories of appropriations. And these are terms you'll hear throughout the budget process, so it's important to grasp really what we're talking about. There are mandatory appropriations, which are permanent appropriations made by Congress and are not subject to annual appropriation activity. In other words, Congress doesn't have to act on them each year to make the money available. A great example of this is Social Security. And so they can make changes over time, but once they establish the criteria for the program, in other words, what it takes one to receive funding from the program, that's pretty much established until they change it again. And as it says, it's about 72% of the federal outlays in 2023. So it's almost 3/4 of what actually gets spent. The discretionary side, which makes up about 28% of federal outlays in 2023, is budget authority provided by annual appropriations acts that are normally passed through appropriations committees. This is a process structured by the Budget Act of 1974. The authority to spend is limited by the time, purpose, and amount of the appropriations. And every year, or subject to the availability, if it's a 3-year appropriation, Congress could technically wait 3 years before appropriating again. But Congress has to act to make this funding available all the way, as it said, all the way back to the Constitution. They have to pass a law as an appropriation to make this budget authority available. Salary and expense accounts at agencies are the most common for this. So while and some agencies have both. So while the Social Security payments is a mandatory appropriation, the administration of or the pay the people that work at Social Security is a discretionary appropriation. Now let's look at kind of where these numbers come from. So this was the FY25 proposed budget. So this was the one back in February, and so this is is what it is at that time. But the proportions and all still, work out pretty well. Things haven't changed a lot. On the outlay side, on the left, the items in blue are the discretionary account. And those are typically broken up by defense and non-defense. So you can see it's about 27% of the outlays. And this is what the annual budget process, annual appropriation process is really sort of working out each year. Only about 27% of the budget. Conversely, 73% of the budget is in mandatory spending. It's going to keep on going unless Congress makes a big structural change to it. One of the major elements here in this pie slice that's pulled out is net interest. And so this is interest the government pays for the debt it has to take on in a deficit situation. So when revenues don't match expenses, the government has to borrow money. Well, in 2025, it was projected that that interest would cost $969 billion, almost as much as the entire non-defense category and more than defense budget. So that gives you an idea, kind of the scope of that. On the right-hand side is the revenue, or where the money comes from. The biggest share in the modern government is the individual income tax. That collects $2.6 trillion. The last part is the corporate income tax at the bottom here. Social Security and payroll taxes are a big chunk, but all of that is dedicated to paying for those programs. So they're not really available. They're not available for other programs. The Medicare and payroll tax is also dedicated, so that's not available to other programs. And this little tiny slice up here, other receipts, is everything else. Now, one of the biggest components of this are tariffs and other customs fees. So this used to be the biggest part of the budget before the individual income tax was legislated. But now, as you can see, it's actually one of the smaller slices. Andy, this is over to you.
Okay, well, now we're going to talk about the budget formulation process. And the key thing to learn about the budget formulation process is that it is structured and regulated by, next slide, OMB. OMB establishes the process that executive branch agencies have to do to submit their budget to Congress. Because remember, as we said before, everything has to flow through the president. It is the president that submits the budget to Congress, not the individual agencies. So OMB Circular A11 prescribes the criteria for preparing, submitting, and executing the budget, and how it will go through the Office of Management and Budget. This provides authoritative guidance, and we had a session this morning in detail about OMB circulation, but it talks about the data that is required and the process for submitting it. Next slide. And here's just the sections that are, again, we covered this morning, of the information regarding the budget formulation process. It specifies the overview of the process, talks about the laws that governs the budget formulation process, identifies keys, terms, and concepts, has this concept of scoring. Scoring is the process of assessing the cost of legal changes of bills that change the law. So if you're changing, for example, Social Security benefits, scoring tells you what that would cost the government. And then a very important part, Section 22, talks about communications with Congress. Because it's the president that submits the budget, agencies are strictly limited in how and what they can communicate with Congress. Next slide. And then there's information on the preparation and submission of budget estimates. Again, this document is being rewritten by the new administration, as it always is, but these are the traditional categories, and it's very important that when the new A11 comes out, that you read it and adapt your policies in your office and your processes and your procedures to the new A11 when it's issued by OMB. Next slide. So let's talk about the steps in the formulation process. Now this is the classic process, and some of it generally stays as it is. So the part on the left, the internal budget formulation and OMB review and passback, pretty much stay the same every year. So the process generally begins at the agency level. You can see down here in the product row where the agency will submit guidance from the department or the independent agency to the bureaus or administrations, the subordinate components of the department. And then the bureaus then request their budgets from the department. Now here they're not really requesting a budget, they're requesting what they're going to submit to OMB as their request for the agency. And so then the agency reviews the budget requests, and they go through a decision process, generally in July, and then they submit the OMB budget they prepare the OMB submission and they submit it to OMB usually first week in September. Now, this process, like I said, generally stays intact, except in a transition year, because they're essentially having to redo the budget formulation process in rapid order to get the president's budget done in the spring. But I'm pretty confident next year this process will follow through. And then the next step in the process is the OMB. So OMB gets the request from the department, and then it reviews it. Now, they have hearings at OMB where they invite the agencies or the departments to come in and present their budgets and answer questions and discussions. And then there's a process called director's review where the analysts, the examiners at OMB present their recommendations to the director of OMB, and he, in this case it's a he, makes the decision on what will be the president's budget request to Congress. Those decisions are communicated back to the departments and agencies through something called passback, which is essentially a memo saying here's what your agency is allowed to request, or maybe I should say is going to be included in the president's budget submission to Congress. Now, agencies are generally given a couple days, traditionally 3 days, to submit an appeal where they ask for some money back. And then there's something called final settlement, which is where OMB says, okay, we listened to your appeals, here's the decision. Then in January, there's the president's budget production and rollout. And that's where the actual documents that Rick just talked about are produced, and then they're rolled out to the Congress and to the public at large. Concurrent with the president's budget, those 4 volumes, there's also the CJs that Rick just talked to you about. And so there's a process for actually putting those big, complicated documents together. Next slide. So the building blocks of the federal budget are accounts. So we need to kind of quickly go through and explain what an account is. Now, this is a big, ugly chart, right? It's really complicated. And this is the chart that explains how the Treasury pays the bills for the federal government. And there's a reason I put this. This is kind of the end state of the budget process, right? Because money is flowing out of the government. But the beginning of the process, the formulation process, is built to end up here. And how does this work? We have a general fund of the U.S. government, that box in the center. And that represents all the money that the government can spend. Now, there's more than just the general fund. There's a fund for Social Security. There's a fund for transportations and other things. But money flows into the fund, general fund, from taxes and from Treasury bonds from the capital markets. But then the money is strictly controlled, and this is the appropriation part, where each individual account is identified and how much money goes into each of those accounts is identified in the president's budget account. So you can see here in little, I know it's small, and we'll look at it bigger in a few minutes, but the president budget account essentially tells how much money will be in each account that may be spent. Now I'm going to stop here. Does this make sense to y'all? Are you following me? What the budget is ultimately all about is identifying what amount of money can go in the account, and then the Treasury can ultimately, agencies can obligate and Treasury can pay. Okay? I'd be curious if you find this chart useful. Just put in chat because it's a new chart. Next slide. So their federal funds have several funds, right? The general fund includes income and excise taxes and all programs not supported by trusts or special funds. Then there's special funds, things like the crime victim funds. And then there's revolving funds where the Treasury does business-like activities, things like the post offices and stuff like that. So that's to keep in mind what we're focused on. But most of the time, we're talking about the general fund. Next slide. So the list of accounts is Treasury maintains the list of accounts in something called the FAST book, the Federal Account Symbols and Titles book. And so this is the book that essentially lists all the accounts in the federal government that can be spent. And this book has to be crosswalked with the president's budget appendix, because the president budget appendix is essentially how much money the president is requesting for each account listed in the FAST book. And there's some detail here which you can read later. Next slide. And there's actually, if you go to the link at the bottom of this page, you can get a handy dandy spreadsheet that lists all the Treasury accounts. And so you can see the whole entire government, what accounts they are, and you can see about whether it's a no year, which is the X, and things like that. So next slide. There's trust funds, and that's important to understand, that receive collections that are dedicated by law for specific purposes. And there's examples: Social Security, Medicare, unemployment compensation, military and civilian retirement. And remember, the bulk of federal spending each year is done out of trust funds, because the Social Security fund, trust fund, and the Medicare trust fund and unemployment are all together bigger than the discretionary funding that is funded out of appropriations. Next slide. And I just wanted to show you the Social Security Trust Fund here. It's a balance sheet, and the OASI is your retirement. The DI is your disability, and you combine them two. And you can see it has assets, it has income, and it has costs. And you can see that the net change there is that there's a minus $41 billion. And that's the drawing down of the trust fund. And that, just to keep that in mind as we talk about budget formulation. Next slide. So we also have to understand the budget data and how that works. And that data shows up in the president's budget appendix. And there is a unique language that needs to be understood, the terms and concepts in the budget database. In the budget. And so you need to take the time to understand precisely what these terms mean. And I'm actually repeating this slide from the previous class because it's so important that you spend the time and learn from OMB Circular A11 what the terms mean. And so we're going to use the President's Budget Appendix to introduce you to this language of budget. Next slide. Which is the foundation of formulation. So the first term to understand is, what is budget authority, right? Now, OMB has a definition of budget authority: the authority provided by law to incur financial obligations that will result in outlays. So an obligation, again, is a commitment that the government makes to spend money, a legal quote obligation to spend money. And that's like a contract or a grant award and things like that. An outlay is when the money is actually spent. And you see the definition of obligation there. And it's a key thing to reminder, and again, we covered this in the previous class, but if you violate the Anti-Deficiency Act, if you award contracts, issue purchase orders, hire employees, or otherwise obligate the government to make a payment before a law has provided sufficient budget authority for that purpose. So don't violate the Anti-Deficiency Act. Well, how do you know if you're violating the Anti-Deficiency Act? Well, you have to understand the concepts of amount, purpose, and time, because legislation creating budget authority must address three questions. The amount, how much is available to spend? And there's two kinds of laws, right? There's definite amounts, which is most discretionary, where it says a specific amount is provided. And the language is something like, there is hereby appropriated $100, or not to exceed $100. Or, of course, it's always much more than that. But then there's also indefinite amounts. A variable key factor determines the amount. And here it's where such sums may be necessary, or such amounts as are collected. So there the limit is not on the amount, but there's a statement that it can spend under the conditions. And then once you've determined the amount, you have to decide what is the purpose, because appropriation laws will always tell you what the purpose is. And we'll cover more of this tomorrow in the reading appropriation laws class. And then appropriations are always bound by time, and it can be 1 year, multi-years, or there can be things called a no-year fund. Or no-year appropriation. Next slide. Okay, so there's 4 types of budget authority. There's appropriations, and that means you can obligate and pay. Then there's spending authority from offsetting collections. And these are things like fees from the park, national park fees. And so there you're allowed to obligate and pay only if you've gotten the cash collections, right? So you have an obligation, but you have the authority to obligate depending on whether you've gotten the payments. So like the Park Service can obligate, but only to the extent that it has received cash. And then there's contract authority and borrowing authorities, which are more complicated authorities. And here you can obligate advance of an appropriation, but you can't pay, so that's a little strange. And borrowing authority gives the ability to pay for borrowed authority. And we've covered the two types of categories of budget authority. There's mandatory and there's discretionary. I think we've covered that. And so we'll go on to the next slide. So in budget data management, you've got to understand that you're dealing with multiple years, and we covered it before, the prior year, the current year, the budget year, up to possibly budget year plus 10. But then you have to look at the data from multiple views. There's budgetary resources. What is the source of an account's authority to obligate? And there's different kinds of budgetary resources. There's obligations by program, like what is the purpose of that you're going to spend, what amount of budget authority will be used by each program in the account. There's object classification, which is about what types of things the government will purchase. And then there's outlays. So what we're going to talk about after the break, we're going to take a break till 1:50, is we're going to go through each of these four things and show how they appear in the President's Budget Appendix. So we'll come back at 1:50.
Just a reminder that Budget Line of Business has upcoming training, question for the record, and there will be a demo of Budget Line of Business budget system, QFR, and Andy Pavord will be the presenter for questions for the record, and that's going to be on March 18th. Also, we have a career development combo that's going to be on March 27th, Eating the Frog, Leadership Life Hack for Productivity. Our Spring Expo is tentatively planned for May 14, 2025. If you haven't joined our newsletter, please do so because all these dates are included. Please consider joining our work groups. We have the Federal Budgeteer work group. If any of you were in the What Makes a Great Budget Analyst this morning, one of our panelists discussed in detail the Federal Budgeteer group. That's where a budget analyst can network, discuss topics related to budget, and any other topics could be working and balancing work and family life. Also, we have data analytics. You're interested in Power BI and other systems, you can sign up for that work group, and the information is there and how you can join. Budget Line of Business has a new homepage. Please check us out. Everything in reference to Budget Line of Business, you will find there. Our upcoming training, forms, the budget systems, etc. There will be a post survey at the end of the form tomorrow. I'm asking that you please fill it out for us and let us know how you enjoyed the form, any training you're interested in, and any areas you would like for us to improve.
We'll start in about 30 seconds. Give everybody 150. They want to start early. Okay, welcome back, everyone. we're going to talk about the President's Budget Appendix. And this, again, is the end state of the formulation process. This is the document that goes to Congress. And we just want you to understand the end state before we actually take you through the process of how we get here. And this presents a detailed budget data for each department and independent agency. So all the spending budget authority for the government is in this one document. I think it's 1,200 pages for the last one. It's long and complex. And this comes from the data that is entered. The data in this document comes from the data entered into OMB's MAX system. So any of you have ever had to deal with that, this is the end product of your work. And it is important that the data in a department's Congressional Justification books and rollout materials, all this data needs to align with the President's Budget Appendix. So that this document produced by OMB, it's the responsibility of the departments in their materials that they produce to make sure the numbers tie to what's in the budget appendix, because it's the President's Budget Appendix that's the authoritative source. If there's a difference between what's in the President's Budget Appendix and what's in a CJ from a department, it's the appendix that is correct and the authoritative number. Okay? So we're going to focus on 4 key tables: budgetary resources, obligations by program activity, object classification, and budget authority of outlays. And these are the key tables that in a lot of ways are the heart of the President's budget request. So next slide. So the first thing in the President's Budget Appendix, and it's arranged by account. So you can see here at the bottom, this identification code, that's the account code. And so for every account, there's these sections that are listed that we're going to talk about here. This is the first part is the draft appropriation law. And this is the formal request for budget authority in the form of proposed language for the appropriation laws. So technically, this is the budget request. The tables that we're going to talk about are not technically a budget request. They're just information to help inform Congress on what the meaning of and the implications of and how this money would be used if it were approved. So this is the key to the whole thing here. It contains critical agency financial and program information. You can see the code. And then it is organized by accounts, as I said, and these accounts tie to the Treasury account fund symbols that we showed you before in that long spreadsheet that I pointed to you. So the TAFs is the bank account, and this is the request for what can be put into the bank account. Next slide. Now the legislative proposals, our appendix includes legislative proposals and their budgetary impacts. Now, this is a little different than the draft appropriation law because the appropriations are laws in themselves that authorize obligations by providing budget authority. But sometimes you need to change the laws, for example, mandatory laws or other laws to go along with the President's budget. And that's done in the legislative proposal section. And you can see here an example of a legislative proposal submitted by the Department of Veterans Affairs. And here, under compensation and pensions, example that you can see here, it shows you this is the amount of budget authority that they're requesting. And notice that it says legislative proposal subject to pay-go. And what that means is that it's mandatory authority that's being requested here, the changes in mandatory authority, and that ultimately all the different requests for changes to mandatory budget authority have to equal 0. They have to balance out. Otherwise, they're subject to pay-go, which means there could be a sequester, which we talked about in the last section, where money is reduced, mandatory funding is reduced to balance it out. So it's pay-go means that these all have to add up to essentially 0. So there's you can increase the budget deficits, but then in some places you have to decrease it in others. Next slide. And Rick, is this your turn? No, wait. This is the budgetary resources table, and I want to take a minute to talk you through this. The purpose of this table is to identify the budgetary resources. What kind of funding is available for obligation? What kind of budget authority is available for obligation? And you can notice there's different types of budgetary resources. You can look at 1,000, and every budgetary resources has a line number associated with it. And it's good to learn these line numbers. So you learn what 1,000 means. 1,000 means unobligated balances brought forward. So that means there was budget authority in the previous year that Congress has given the agency authority to bring over to the next year. It's sometimes called carryover funding. And so that's a source of budget authority in 2019, 20, and 21. This is an old example. And then there's recoveries, which is a special thing. When obligations are not expended, you can recover those obligations. And then this is the key one, 1,100 is discretionary appropriations. And then there's transfers and all these different things. So this table tells you where does the account get its funding, all the different sources, and it lines up to line 1900, the total budget authority for this particular account. And then it tells you that they expect to have leftover at the end of the year unobligated balances, and $6 million will be, you can see here, unobligated balance expiring at the bottom, row 1940, but that money is going to expire. In other words, it's not available for spending the next year. But you're going to see on line 1941, it's got $2,106,000,000, because these tables are always in millions, in unobligated balances that do not expire, and therefore you can go to the top of the 2020 calendar and see that it's available in 2020. So the purpose of this chart, again, or this table, is to show you where the funds, what funds are available and where they came from. Next slide. So just a quick question. A bureau head wants to get a head start on the new program before the fiscal year begins. So he convinces his contracting officer to award a contract for services before the appropriation is enacted. He's trying to get ahead of the game. He wants to, be able to do the project. So why, Congress is gonna appropriate, don't we know that? So is there a problem with this kind of proactive thinking? Yeah, because even though you think Congress is going to do it, you cannot obligate funds until the law is actually passed. Okay? Does everybody get that? Okay, thank you for your responses. I'm going to now pass it back over to Rick, and he's going to continue talking about budget data.
Thank you, Andy. There's a couple questions in the chat I answered while you were going through that. So
why don't you cover those?
Yep, got those covered. If people have follow-ons, please add them to the chat and we can discuss them further. We'll also have time for questions at the end. So now we're going to dive a little bit deeper into the budget appendix. Again, kind of peeling this onion back in layers. Sometimes we'll go over some things, but trying to tie it all together because it's kind of complex. So one of the things we talked about was budgetary resources, and this brings in what Andy was just speaking about in the budget table, the idea that budgetary resources are the sum of any unobligated balance plus any new budget authority provided to equal the total budgetary resources. So again, if an appropriation has multi-years of availability, it can have a carryover balance from a prior year, which would be an unobligated balance. That would be added to the new budget authority Congress might provide. And then the sum of those two would be the total budgetary resources. And these can be true for each type of budget authority. So you can have, contracting authority that gives you budgetary resources, spending authority for offsetting collections. They're each different slices or different layers of this cake. And so they all need to be tracked separately. So, here's another, we talk about an obligation and what's unobligated. I'll let you read the slide, but really, it's so germane to everything we're talking about. That's why we're really kind of going over this again. The obligation is an action that creates a binding agreement that will legally obligate the federal government to pay someone. And so examples of this are letting a contract, that's an obligation, awarding a grant, approving a loan, and the biggest one that goes on in most agencies is processing the payroll. Now that occurs automatically, but it still creates an obligation once that at the end of that pay period when the total payroll is processed. Obligations refers to the sum of all those transactions. And the unobligated balance would be your budget authority minus your obligations would be your unobligated balance. So we just wanted to be clear. Like I said, going to go through that just kind of to make sure it's really defined well. And at the bottom here, we can talk about if your appropriation law specifies what can happen unobligated balances. Some appropriations are multi-year. In other words, the funds are available for 2, 3, 5 years. And some have what's called no year, which means they're available until they're actually expended. Until the money's spent by the government, that money will always be available when it, if it's obligated and then deobligated, it would still be available to the agency to use. Now, some laws have sort of I'll call it a hybrid. They may make a portion of the budget authority available next fiscal year. They may have language like not more than $50 million of this appropriation may be carried over into subsequent fiscal years. So what's that saying is literally is that you can have up to $50 million carried over to the next year, but not more than that. If you have unobligated balances exceeding that, the difference would lapse at the end of that fiscal year. So it all goes back to you have to read your appropriation and understand its specific provisions. So the budgetary resources table. We went over this a little bit. Again, it's the same layout. We just want to lay out, the same things. Row, let me use a little pointer here. Row 1000 of the carryover balances. It's the same sort of thing that Andy just talked about, but just another look at it. The big thing is like the unobligated balance here is what rolls up to the top here. So that's something that you can look at and really pay attention to understand the financing. The other thing that's kind of interesting here at the bottom are these non-ads. And that's kind of a funny thing in budgeting. You can see this non-ad down here. What that means is that as it says, it's a note to kind of explain something, but it's not figured into the calculations in the table. So that's why those non-ad lines are used just to help explain something about it. You can see also this account has unobligated balances, but they're expiring. In other words, they're going away at the end of this year. Since the agency wasn't able to or didn't choose to obligate those funds, $6 million will lapse at the end of this year, but $2.1 billion will carry over. Here we have the obligations by program activity. So the first table was kind of I'll say the accounting look at it, kind of where the money's coming from and the totals of where it's being spent. This table is, really more the view of what are we spending it on. It presents the allocations of it, where the agency has in the past, in the 2019 actuals, or where it intends to spend it in the current and budget year. And so you can see there's things here that are program names, occupational care, inpatient care, medical health centers. So that's really describing the agency's obligations by what they want to spend it on. Departments with OMB approval determine which program activities are listed in a table like this for each agency. OMB guidance in section 82.5 of A11 states that the number of activities listed should be kept to a reasonable minimum without sacrificing clarity. So you want to have sort of the smallest amount that describes the agency's activity so that you're not reporting on many, many program activities that may get down to very small dollar values, relatively speaking. And so there's kind of a balancing act of, how many program activities to list. Excuse me. This provides valuable information to decision makers, but it doesn't answer a very basic question of what is the government buying? Knowing the obligations that support a program activity does not tell you what the government will actually purchase. And, this $22.4 billion for outpatient care in 21 does not tell you what the government purchased. Did it hire doctors? Did it sign contracts to obtain that medical care? Really, the answers to that are found in the next table. Excuse me. The object classification describes what the government buys. It presents obligations according to their initial purpose, not the end product or service that is listed in the program activity table that's discussed in section 83 of A11. Examples include, of course, paying employees and their benefits, contracting for services, travel, training, and renting workspace. The standard tables are in A11, and so at this level, what we call the three-digit level, 11.1, 11.2, 25.1, 25.2, those should be these needs. But this allows analysts to see changes in spending patterns over time. So is travel going way up or way down? Is contracting costs going up or way down? You can see, just looking at these are fairly consistent. Although here's this one line, the equipment line. It's going, a pretty big jump and then drops back down again. So that indicates to me that there's some sort of purchase being contemplated in the current year that doesn't recur in the budget year. So those sort of things can help analysts understand or guide them to have questions to better grasp what's going on in the agency's budget. And it's important to look at that as a presenter, so you have an idea where questions may come from the staffers and from your OMB Resource Management Office when they see changes like that over time. Outlays. So outlays are important because it's what the government really spends. Mostly agencies concentrate on budget authority and obligations, but at the macro level, at Treasury and OMB, they really focus on outlays because they have to come up with the cash, so that the government's checks clear, so to speak. So the outlay is a payment to liquidate an obligation. So it means literally to pay the bill. So the obligation creates that obligation to pay. The outlay is the payment of it. And sometimes you'll hear expenditures or outlays or disbursements. There's some small nuances about those terms, but they're really the same thing. It's the cash disbursement or the electronic funds transfer to satisfy that obligations. Now, outlay rates are different for different types of accounts. So a salaries and expense account, you can imagine, would outlay very close to its full amount each year because everybody's going to get paid by the end of the year. Whereas a procurement account may obligate, this fiscal year and may take 3 or 4 or 5 years to outlay because of the nature of what's being provided. Let's say it's a big systems acquisition, or it's an aircraft carrier. It's going to take 5 years to build. That obligation is going to occur now, but those outlays are going to occur as progress is made in that ship construction. So that completes our short review of the President's budget data. I want to emphasize that this review is only an introduction. We did not cover every table in the President's budget appendix, and we barely scratched the surface of the terms and concepts included in section 82 of A11. But I hope this review will give you some basics and inspire you to take a look and read section 82 of the A11, especially, as Andy said, when the new one comes out, to see what changes there might be. It really contains the Rosetta Stone for understanding that budget data. Now we're going to turn to the budget formulation process and talk about the agency internal budget formulation process. So going back real quick, what's the difference between an obligation and an outlay?
Rick, you're on mute.
Yeah, no worries. I had to clear my throat.
Oh, okay. Are you okay?
Yeah. Mm-hmm.
All right.
So seeing the answers in the chat, most of them are pretty good. Obligation is the legal commitment to pay, and the outlay is the payment. One word I want to be careful, I've seen a couple people use is commitment. Commitment is not the same as either one of those other terms. A commitment is simply a management reservation of funds. In other words, I'll call it penciled in. It's what management plans or the agency plans to do with a amount of money.
Okay, yeah, but it should be done by 4.
Someone's on. Yep, there you go. So don't think that obligation, commitment, and outlay are in any way interchangeable. They each describe a separate phase of the status of funds. All right, I think we've got that, so we'll go ahead and move on here. All right, agency internal budget formulation. So now we're back. We're kind of come down from the president's budget, the big overarching, and now we've kind of dropped down to the within the agency. So this is the agency working with its bureaus. The purpose, of course, is to prepare the agency budget submission to OMB. As Andy said, this is where the bureaus or the divisions or however your agency or entity is broken up, they come forward internally to make their requests or to lay out what they see as their needs for the budget year. Some agencies like to make this kind of a dry run for the OMB submission. So they'll have sort of the same exhibits prepared, the same narratives, the same financial exhibits, and the idea that then they're just making tweaks to them, and their OMB submission is pretty much done before it's when it's ready to go. They're not having to create it. It just depends on what agency's preferences are. The final document is usually produced in that way, since you've kind of worked yourself up into a draft and you kind of have you have things together. But many agencies want less detailed information during this phase. They want to see sort of point papers or ideas about things. And then once leadership has a chance to look at those and decide what their priorities are, then they'll ask those areas to do the additional work of coming up with budget object class displays and phasing their requirements over time, writing narratives that will go in the budget. It really just depends. There's a lot of flexibility in the agency to determine how it wants to conduct this. Once it goes to OMB, of course, that's got to be subject to A11. But at this stage, it always depends on kind of what the agency wants to do itself. So when the agency is ready to submit to OMB, it really becomes under the guidance of Section 51.1 General Requirements. So I've only highlighted a couple of the. There's many. There's a lot of guidance here, and can't take time and wouldn't want to bore you with me reading it all. So I've just highlighted on these page some of the things that I think are especially germane about that, and all of this also is subject to individual discussions that your agency, your departmental budget staff will have with OMB. There might be certain requirements that the OMB examiner or the resource management office will waive. They'll say you don't have to do that part. Or there may be additional requirements that they want to see, additional exhibits of that, of various nature that they want to see the agency has submitted. So it's really important to have that open dialogue with what the examiner expects to see, and what goes on, because the A11 covers, you have to remember, it covers all of the federal government, the executive branch, and so some places may or may not apply to your situation. But the big things here, like the budget, and this is a basic budget tenet, it ascribes the policy, strategies, and resources. It brings it all together to show how they fit. I want to do this, and it's going to cost this much money, and this is how I need the money. It's going to show how your agency is supporting or may have differences from current administration policies. Maybe there's some law in the books that says I've got to keep doing this, even though the administration, may want to be bringing that down. It might have a permanent appropriation or a permanent statute that says you have to keep doing this thing. So it's important to lay out things like that may exist. Or your leadership may decide that they really think it's important to put a marker down and say, we need to go in this direction, not this other one. It may not work out well, but they want to make that, identify that to OMB. Here again are a couple other things. Often, almost every year, OMB issues broad guidance to agencies about what level of resources they foresee being sought in the new budget year. They may say that the president seeks to have a 5% increase in overall discretionary budgets, or they may, have a decrease, and they may have specific guidance for your agency or department. So this is where OMB will ask for a separate purpose and justification if you're going away from that guidance.
So
let's say the president.
We should point out here, though, that this is the old OMB A11 guidance, and that new guidance is going to be published that may be different than this, and that you have to follow the new guidance. So let's just kind of go through this kind of quickly, because this may change.
Yeah.
Okay.
The concepts will probably stay the same, but definitely to Andy's point, the new A11 should be the first thing on every budget analyst's to-do list when it comes out, to scan that and look for changes. So again, it's going to cost, you need to describe the full cost of the program, not just a partial. They want to see the full cost of things. And anything that's not consistent with the policy guidance needs to be called out and pointed out so the discussion can take place. So again, you can look back through these and look for the highlighted slides.
Yeah, let's just kind of skip
Andy,
through this.
Is there a stopping point you want at this session before we go into formulation 2? It's 216.
Okay.
We'll just pick up formulation. Yeah, we're at the end of the class. I think we'll just pick up where we start off here. We'll just start at it. I think we'll break out here and then start up with these slides after the break.
Awesome. That will work. That will work. So.
Okay.
Thank you, everyone, for joining us for Budget Formulation 1. Thank you to Andy and Rick. If you're joining us for Budget Formulation 2, that will start at 2:30. If you're not joining us, please remember that we will be sending out a post survey tomorrow after the last session. Let us know what you think and what training you're interested in or how we can improve for you. So we'll see you on the inside at the next session. If you don't have that link, I will post it now so that you can join us. Thank you so much. Enjoy the rest of your day.
Until you come back.
Yeah, for those that are not coming back. There we go. Let me stop this recording. I didn't stop it before.